Morning, everyone. Good morning.
Good morning, sir. Good morning, sir.
Okay. Today, we shall be looking at personal income tax computation for employees and sole trader. How do we compute personal income tax for employees and what? For sole trader. So that is what we shall be looking at this morning. Last week, we looked at adjusted profit and we solve question on adjusted profit. So how do we compute personal income tax for employees, for sole trader? We know that personal income tax is a tax imposed on income derived by employee, sole traders, partnership, and trustees. But in this topic, we basically look at how do we compute personal income tax for employees and sole traders. So who are the individuals? Who are the persons liable to personal income tax? Number one is individual. Number two, partnership. Partners in a partnership business, they are supposed to pay personal income tax. Number three, communities and families. Communities and families too, they are expected to pay personal income tax. Number four, trustees. Trustees too, they are expected to pay personal income tax. Member of armed force personnel, such as Nigeria Army, Nigeria Police, Nigeria Air Force, they are expected to pay personal income tax. Officer of Nigeria Foreign Service too, they are expected to pay personal income tax. Resident of Federal Capital Territory too, they are expected to pay personal income tax. And the other one is non-resident individuals too. They are all expected to pay personal income tax. When we talk about individual, we talk about employee, we talk about sole proprietorship. That is what individual means. Employees or sole proprietorship. And we are talking of resident individual and non-resident individual. Who is a resident individual? Resident individual is a person that domicile or reside in Nigeria for more than 183 days. Resident individual is a person or individual that domicile or reside in Nigeria for more than how many days? For more than 183 days. That means if you are residing in Nigeria in a particular year of assessment, within 12 months, if you reside in Nigeria, you stay in Nigeria for more than 183 days, that means you are a resident of Nigeria. Resident individual does not mean your nationality or your place of birth. Maybe because your place of birth is in Nigeria, you are a Nigeria resident. No. Resident individual depends on your number of stay in Nigeria. So according to personal income tax, resident individual simply means a person throughout a year of assessment, a person that domicile in Nigeria for more than what? For more than 183 days. And secondly, a Nigeria diplomat serving as a Nigeria citizen, serving as a diplomat in another country. So when we talk about resident individual, we mean Nigeria resident. Nigeria resident is a person that domicile in Nigeria for more than 183 days. which is half of a year, and a Nigeria citizen that is not in Nigeria, but is outside Nigeria, but that citizen is working, is representing Nigeria as a diplomat, or is working in the Nigeria foreign embassy outside the country. That is resident individual. Why non-resident individual? Is a person that does not domicile in Nigeria for more than 183 days, but derive income in where? In Nigeria. Non-resident individual is a person that does not domicile in Nigeria for more than 183 days, but what? But derive income in Nigeria. And secondly, a foreign citizen serving as a diplomat in Nigeria. That means those foreigners that are working in the foreign embassy here in Nigeria, they are non-resident individuals. And any other person that comes to Nigeria but does not stay for more than 183 days, and that person derive income in Nigeria, such person too, they are non-resident individual. That means another name for non-resident individual, we can call them non-Nigeria residents. So if we look at the list of those who are supposed to pay personal income tax, we said individual. That means this individual can be an employee or sole trader that are residing in Nigeria. That means resident individual. We also said partners. Partners in a partnership business that reside in Nigeria, they will pay personal income tax in Nigeria. Communities and families too. When they have a family income, they will pay personal income tax in Nigeria. Trustees in a settlement arrangement too, they will pay personal income tax in Nigeria. Members of armed force, they also pay their personal income tax because they are working in Nigeria. Officer of Nigeria Foreign Service. Officer of Nigeria Foreign Service means those that are outside Nigeria, but they are working in the embassy of Nigeria outside the country. They will pay their personal income tax in Nigeria. They will not pay their personal income tax to the country that they post them to. So that is the list of those individual liable, those persons or taxpayers liable to personal income tax. Likewise, personal income tax is based on place of residence. Personal income tax is based on what? Place of residence. That means where you reside, the state that you reside, that is where you are going to remit your personal income tax to. Your residence. The personal income tax, as we all know, is collected by the State Board of Internal Revenue Service. It's collected by who? The State Board of Internal Revenue Service. What that means is that the state you are residing is where you remit your personal income tax to. Personal income tax is based on place of residence, which is residential rule. When you are working in Lagos and you are residing in Ogun State, what the law is saying now is you need to pay your personal income tax to Ogun State government. That is where you are residing, not where you derive the income, though you derive the income in Lagos. But you need to remit your personal income tax to who? To Ogun State government. So personal income tax is based on place of residence. What is place of residence in relation to personal income tax? What is place of residence? Place of residence in relation to an individual simply means a place available for work, for his domestic use in a relevant day. It does not include any hotel, rest house, or any other place at which is temporary lodging unless there is no permanent places available for use on that day. In relation to personal income tax, they are talking of place of residence. Place of residence simply means a place available for individual for his domestic use in Nigeria on a relevant day. That means the place that you are sleeping, you are doing your social activities, you put your family, you wash your clothes, you understand? So that is your place of residence. Place of residence does not include hotel. If you are staying in an hotel, it's not your place of residence. Take for instance, somebody may have his family in Ogun State. He now get an appointment, a job in Lagos State. For him to be going every day to Ogun State, he may say, okay, let me rent an hotel for a week. I will be going back every weekend. That hotel is not his place of residence. His place of residence is his permanent place of abode, where you are residing, where you are using for your domestic use, where you put your family. The only way we can set hotel or rest house or temporary lodging is your place of residence is when you don't have permanent place on that day when you are assessed to tax. Take for instance now, somebody that is just coming from abroad. So maybe that person have lived the country for like 10 years, we want to relocate back to Nigeria. The first time of coming, he has to rent an hotel where he's going to stay for a while before he stabilize himself. In that case, that person don't have permanent place in Nigeria. That person don't have permanent place in Nigeria. His place of residence, we can use it as a rest house or hotel. But in a situation where you have a permanent place, where you have a domestic use place, your place of residence will be the place you are using for your domestic use, which does not include any hotel, rest house, or any other place that is used for temporary lodging. That is that. So, type of place of residence under personal income tax. What are the type of place of residence we have? We have two types of place of residence. We have single residence, we have dual residence. We have single resident, and we also have what? Dual resident. What is single resident? When an individual in a relevant day, that person has just one place of residence, one place that is using for domestic use. When that person have only one place that is using for domestic use in a relevant day, that is single place of residence. That is single resident. Single resident occur when you have one place of, but in the case of dual residence simply means a situation whereby an individual in a relevant day has more than one place of residence. A situation whereby an individual in a relevant day have more than one what? Place of residence. Hello, can you hear me? Hello, the network is bad. Can you hear me now?
We can hear you.
Okay. So,
yes, sir, we can hear you.
Okay, we are talking of dual residence. Dual residence simply means a situation whereby an individual or company that are subjected to tax in Nigeria, they have what? More than one place of residence. A situation whereby an individual or company that are subjected to tax in Nigeria, they have more than one place of residence. That is dual residence. I'm giving an example. Maybe you have a house in Lagos State. You also have another house in Ogun State. Maybe you have two wives. One of your wife is staying in Lagos, the other one is staying in Ogun State. You normally shift. In that case, you are a dual resident. Now, the question is, who are you going to remit your personal income tax to? Because you must remit your personal income tax to one state of state authority. State Tax Authority, which is State Board of Internal Revenue Service. When you are a dual resident, you have more than one place of residence that you are using for your domestic use. You are pricing that you have more than one family. One of your family is in Ogun State, another one is in Lagos State. And you normally visit the place often. In that case, we need to determine your principal place of residence out of the two. A situation whereby an individual have a dual residence, we need to determine his or her principal place of residence. That means out of the two places that you are residing, which one is the most common? Which one do you familiar with? Which one do you normally stay most? That is your principal place of residence. That is the where you are going to remit your tax to. Is the state. That is the state you are going to remit your tax to. So, in a situation whereby an individual have more than one place of residence, when an individual is a dual resident, we need to determine his or her principal place of residence. Again, the principal place of residence also determines the type of income that you receive. Assuming you normally receive the only income that you receive is pension, your principal place of residence will be your usual place of residence out of the two. Which one do you reside most? But if you are an employee, you receive employment income, and you have two places of residence, you are a dual resident, your principal place of residence will be the place that is nearest to your place of work. So that is how we determine principal place of residence. So the topic is personal income tax computation for individual, for employee, for sole trader. How do we compute personal income tax? Now, we need to have it in our mind that this personal income tax, we assess it to tax either on actual year basis or on preceding year basis. There are some income under personal income tax that are assessed to tax on preceding year basis, while some income are assessed to tax on what? Actual year basis. If the income is a trading income realized from trade or business, is going to be assessed to tax on preceding year basis. But if the income is an employment income, like salaries, basic salary, housing allowance, transport allowance, benefit in kind, bonus, commission, that one is going to be assessed to tax on what? Actual year basis. Secondly, if the income is an investment income realized from dividend, interest, royalty, rent, and blah, blah, that one is going to assess to tax on what? Preceding year basis. We are still going to look at the formats where we are going to distinguish different type of income under personal income tax. Now, one of the income under personal income tax is income coming from employment. If you are an employee, the income you receive from your employer is one of the income under personal income tax. And what is employment? Employment means an agreement between who? Between employer and employee, where the employee provides certain service. In return is the payment of what? Salaries and wages. We have different type of employment. According to personal income tax, there are two different type of employment. We have Nigeria employment and we have foreign employment. According to personal income tax, there are two different type of employment. We have what? Nigeria employment and what? Foreign employment. Nigeria employment simply means any employment that the duties is wholly or partially performed in Nigeria. You render that service to your employer in Nigeria. You are working in Nigeria. You carry out the service that the employer engage you. You carry out everything in Nigeria. That is what Nigeria employment. But in the case of foreign employment means those employment in which the duties are wholly or partially performed outside Nigeria. That is what? Foreign employment. The service you are rendering for your employer, you do not do it in Nigeria. You are doing it outside Nigeria. That one is what? Foreign employment. Now, there is another one called vocation. What is vocation? Vocation simply means a specified occupation or profession, trade length, or practice by persons. When you are learning a trade, you are learning a profession, you are learning a work from an individual. That is a vocation. What is profession? Another one called profession. Profession simply means when you have a specialized knowledge or education, training on a particular field. You render specialized knowledge, training, education on a what? On a particular field. Auditing is a profession. There is a legal profession, accounting profession, medical profession. All these people, they are professional. They have a specialized knowledge in a particular field. Another one, what is trade? Trade simply means the art of what? Buying and selling. The art of exchange of goods and services between two or more persons. That is trade. Now, how do we compute this personal income tax computation? This personal income tax computation, how do we compute it? Personal income tax computation, how do we compute it? Let's go to that, how we compute the personal. We are still coming to all this theory. When we are explaining the personal income tax computation format, we are going to look at those theories one by one. If you want to compute personal income tax, you divide your income into two. You divide what? Your income into two. One of them is earned income, while the other one is what? Unearned income. Your computation of personal income tax, you divide your income into how many? Two. Earned income and what? Unearned income. What is earned income? Earned income means income derived from service render that involve physical and mental effort of the individual. Example of earned income is employment income. When you are into employment, you are earning earned income. This earned income, we divide it into three. This earned income, we divide it into how many? Three. We have employment income. We have another one called trading income, and we have professional income. Earned income is divided into what? Three. Employment income, trading income, and what? Professional income. Employment income means those income that you derive from employment. Those income that you derive from what? Employment. What are the examples of employment income? Basic salary, housing allowance, transport allowance, leave allowance, benefit in kind, pensions, gratuity. All this employment income, like I said earlier, they are assessed to tax on actual year basis. Employment income are assessed to tax on what? Actual year basis. Trading income, when you are into business, you make profit from selling of goods and services. You are a sole proprietorship. Your own income is called trading income. That profit you make after you deduct all your expenses from your income, that profit is a trading income. And trading income is assessed to tax on what basis? Preceding year basis. Trading income is assessed to tax on what basis? Preceding year basis. Professional income. Professional income means maybe you are a lawyer or you are an auditor, you are a tax consultant. Those income that you receive from service rendering of professional fee, professional service, the professional fee you collected. So they have the professional income. And professional income too, they are assessed to tax on what? Preceding year basis. So, ladies and gentlemen, under the earned income, like I said, the earned income is divided into three: employment income, trading income, and professional income. The employment income is assessed to tax on actual year basis. The trading income is assessed to tax on preceding year basis. While the professional income too, they are assessed to tax on what? Preceding year basis. So if you want to compute personal income tax, like I said you are going to divide your income into two. Earned income first. Why second one is what? On earned income. Under the earned income, you will divide the income under the earned income into three: employment income, trading income, and professional income. One of the employment income is salary, benefit in kind, pension, gratuities, other allowance like housing, transport. The trading income is profit from business. And we have another one, professional incomes too. So if you want to compute personal income tax, you will have earned income first, and the second one is on earned income. What is on earned income? On earned income are those income derived from investment activities. On earned income, they are those income derived from what? Investment activities. Example of unearned income. What are the examples of unearned income? Example of unearned income: rent received, interest received, royalties. They are all example of unearned income. Unearned income are those income that you derive from investment activities. Rent received, royalty received, interest received, dividend received, they are what? Unearned income. They are unearned income. So how do we assess unearned income into tax? Unearned income is assessed to tax on PYB, preceding year basis. What that one means is that the unearned income you earned last year, is going to assess to tax this year. The earned income you earn in 2024 will be assessed to tax in which year? In 2025. So see on computation of personal income tax formats, you will when you want to compute personal income tax, you will divide your income into two: earned income and what? Unearned income. When you sum earned income and unearned income together, it will give you what is called total income. Earned income plus unearned income, it will give you what is called what? Total income. Earned income plus unearned income is going to give you what is called what? Total income. When you get your total income, you will less what is called tax exempt. When you get your total income, you will less what is called what? Tax exempt. What is tax exempt? What are the tax exempt? Tax exempt, they are the relief given to an employee or given to a sole proprietorship from his or her contribution to relevant agency. One of the tax exempt is National Housing Fund contribution. In your salary, before your employer pays your salary, your employer normally deducts some deduction apart from personal income tax, apart from payee. One of the deductions your employer deducts is National Housing Fund contribution. The law make it compulsory that on every employee, there should be a contribution to National Housing Fund. And what is the contribution rate for National Housing Fund? The contribution for National Housing Fund is 2.5% of your basic salary. That means your employer is mandatory to deduct 2.5% of your basic salary as your National Housing Fund contribution. This is deducted on every employee's salary. While computing personal income tax, if the examiner gives us the National Housing Fund contribution amount, we don't need to find 2.5% of basic salary. But if the examiner now tells us that the employee or the person they pay National Housing Fund contribution, they did not give us the amount, we have to look for 2.5% of the basic salary and put it. Another tax exempt that we are going to minus from your total income is called National Health Insurance Scheme, NHIS. This one too, employer deduct it from employee salary. National Health Insurance Scheme, this one too, the employer deduct it from who? From the employees' salaries. In the question for personal income tax, the examiner may give us the amount. If the examiner gives us the amount, it's okay. But if the examiner now tells us that the company paid National Housing Fund on behalf of the employee, they did not give us the amount, we need to we need to calculate the National Housing Fund by ourselves. What is the rate of National Housing Fund? The rate of National Housing Fund is what? 5% of basic salary. 5% of what? Basic salary. That is what the employer deduct from employee salary. So your national housing fund is 5% of basic salary. But why computing personal income tax? If the question gives us the amount, we don't need to go and find 5% of basic salary again. Let's use the amount given to us. But if the examiner did not give us the amount, and we are told that they pay national housing fund, national health insurance scheme, we need to find 5% of basic salary and use it as the national health insurance scheme. Another tax exempt that we have is pension contribution. Another one is what? Pension contribution. This one is so common, national pension scheme. We know every month from our pension, from our salary, and our employer deduct how many percent for pension?
8%.
8%. 8% of our basic sum of basic housing and transport. When you add your basic housing and transport allowance together, 8% of it is what our employer deduct from our salary. That 8% deducted is a tax exempt. We are going to use it. This tax exempt, what this tax exempt means is those deductions that we use to reduce our income, that our employer have already deducted from our salary, and while computing our personal income tax, we are going to use it to reduce our income so that our personal income tax will reduce. That is the reason why we are lessening all these tax exempt, because our employer have already deducted from our salary. So while computing our tax too, we need to deduct it so that our tax will reduce. So your pension contribution, your national pension scheme, is 8% of sum of basic housing and transport. Sum of basic housing and transport allowance, when you add them together, 8% of it is your pension contribution. Like I said earlier, in a question of personal income tax, sometimes the examiner will give us the amount that our pension contribution for Mr. X is 20,000 naira per annum. If it is per annum, 20,000 naira per annum, that means it's okay. But if it is 20,000 naira per month, while computing the personal income tax, you times it by 12, because the personal income tax that we want to compute in this year is annual, is for 12 months. We normally compute personal income tax annually. When you compute the tax annually, you know the tax that the employee is supposed to pay annually. It is then you now divide the tax by 12, that you know what he or she will be paying every month. So if the examiner gives us the national pension scheme amount, the pension contribution amount, we don't need to find 8%. But if the examiner did not give us, we must find 8% of sum of basic housing and what? And transport. Another tax exempt that we have is called life assurance policy. Life assurance what? Policy. What is life assurance policy? Our employer, they normally insured our life. Law make it mandatory for employer to engage in group life insurance to insure the life of all their staff. It is called group life insurance. That premium paid by the employer to the insurance company for each employee for insuring their life It's called life assurance premium, and you can use it to reduce your tax as an employee. You will use it as part of your tax exempt. You will use it as part of your what? Tax exempt. Another tax exempt that we have is gratuity. If one of the employees is receiving gratuity from his old employment, it's a tax exempt. It's not going to be subjected to tax. Gratuity is not subjected to tax. It's a tax exempt. However, when you want to use gratuity as a tax exempt, you will have used it as an earned income. Look at the format. Under the earned income, under employment income, under the earned income, one of the employment income I stated is gratuity. Assuming this gratuity is 10,000 naira, once I write it under the earned income here, under the tax exempt too, I will come and write gratuity 10,000 and remove it again. Some are in the opinion that you may not even recognize gratuity at all as an income. If you don't recognize gratuity as an earned income here, you don't need to use it as a tax exempt again. But if you recognize gratuity as an income here, you put 10,000 here as an income. Under the tax exempt too, you come and use that 10,000 again, come and deduct it again. Now, after you add all your tax exempt together, your national housing fund, national health insurance scheme, life assurance premium, pension, gratuity, after you add everything together, you deduct it from your total income. Your total income means earned income plus unearned income. When you get your total income, you deduct your tax exempt from it. The balance you are going to get after deducting your tax exempt from your total income is called gross income. After deducting your tax exempt from your total income, the balance you are going to get is called what? Gross income. From your gross income, the next thing to minus is consolidated relief allowance. From your gross income, the next thing that you need to minus is what? Consolidated relief allowance. That is the next thing that you need to minus. Consolidated what? Relief allowance. This consolidated relief allowance, how do we calculate the consolidated relief allowance? Let's go and look at how we calculate consolidated relief allowance. The consolidated relief allowance, if you want to calculate it, is higher of 200,000 naira or 20% of gross income. Higher of 200,000 naira or 20% of what? Gross income. Let's show how we calculate the consolidated relief allowance. If I want to calculate the consolidated relief allowance, I said higher of what? 200,000 naira or 1% of gross income. Between 1% of gross income and 200,000 naira, which one is higher? I will look at that. Secondly, I will now say plus 20% of gross income. So I'm trying to look for where we do the consolidated relief allowance, where we show how we calculate it. This consolidated relief allowance, if I want to calculate it, I will compare 200,000 naira with 1% of gross income first. Which one is higher among the two? Anyone that is higher, assuming 200,000 is higher, I will take that. I will now plus again 20% of what? Gross income. This personal income tax I'm explaining today, this format of personal income tax I'm explaining today, this year will be the last time for using that format. As from 2026, according to the Nigeria Tax Act, a new format will come out again. A new modality for computing personal income tax is going to be effective as from next year. This is the last time we are going to use it, because the new tax law, the 4 recent tax law that was signed into law by the president, is going to commence in January 2026. That is the reason why we are not looking at it now. So ICAN is still working based on the old tax law, which we are still using now. The new tax law commenced in 2026. In the new tax law, there is no consolidated relief allowance again. The new tax law, the consolidated relief allowance has been replaced by a rent allowance of 200,000 naira only. But in our exam that you are writing in this November diet, is going to be based on the old tax law. That is the reason why I'm taking you this. A lot of changes has been made to personal income tax in the new tax law. A lot of changes has been made to company income tax. A lot of changes has been made to capital gain tax. A lot of changes have been made to value-added tax. But as I'm talking to you right now, you are expected to know the old tax law for exam's sake. So when you less consolidated relief allowance from your gross income, you now get what is called chargeable income. When you less consolidated relief allowance from your gross income, you get what is called what? Chargeable income. What is chargeable income? This chargeable income is what we are going to attract, is the income that you are going to use to calculate your tax, that your tax rate is going to be based upon. The income that your tax rate is going to be based on, that you are going to base your tax rate upon, is the chargeable income. However, if your chargeable income is less than 300,000 naira, you will pay a minimum tax. If this your chargeable income is less than 300,000 naira, you will pay what is called minimum tax. And what is the minimum tax rate for personal income tax? The minimum tax rate for personal income tax is 1% of total income. If your chargeable income is more than 300,000 naira, you are going to apply this table to compute your personal income tax. If your chargeable income is more than 300,000 naira, you are going to apply this table to compute your personal income tax. First, you are going to use first 300,000 naira at 7%. Second 300,000 naira at 11%. Next 500,000 at 15%. Next 500,000 at 19%. Next 1.6 as 21%. Next 3.2 at 20, above 3.2 at how many percent? to 24%. That is how you compute your personal income tax. I want to ask a question. Assuming my chargeable income is 1.1, my chargeable income is assuming my chargeable income is 950,000. My chargeable income is 950,000. So how do I compute my personal income tax? Who can tell me? If my chargeable income is 150,000, so how do I compute my personal income tax? 950,000.
First 300 will be 7%. Second 300 will be 11%. The third one, which is next 500, will now be based on 15%. So the one that means the 400,000 will be subject to
my chargeable income is 950,000. So let's compute. Let me compute the tax. If my chargeable income is 950,000.
Okay, you want the figure?
I'm just asking, what rate am I going to use?
We are going to use 7%, 11%, and it will end on 15%.
You are right. Let me just open an Excel for better illustration. If my chargeable income, my chargeable income is what? 950,000. What that means is that this 950,000, if I want to compute the tax, first $300,000. That means the first 300,000 the first 300,000, that one is going to be assessed at what percentage?
7%.
At 7%. Second 300,000, that one is going to be assessed at what percentage? Second 300,000. At what percentage? 11%. Abi?
Yes.
Now, out of 950, how much have you used already?
600.
600. How much is remaining?
350.
That 350, what percentage am I going to use?
15%.
15%, because that 350 will fall under next 500,000. Do you understand me?
Yeah.
The 350 will fall under next 500,000. So you can see the personal income tax that they are going to pay. That means a chargeable income of 950,000, we pay personal income tax of how much? 106,500. But can I ask a question again? If my chargeable income is 250, what do I use?
1%.
1%. Which is what? Minimum what? Minimum tax. 1% of what?
Chargeable income.
No, I will not use 1% of chargeable income. Let me take you back to the notes. I will use 1% of total income. When your chargeable income is less than 300, your tax liability, your personal income tax will be based on minimum tax. And that minimum tax will be 1% of your what?
Okay. Chargeable income. Total income.
Total income. What is total income? Like I said earlier, total income is what? Earned
Your
income plus
end
what?
unearned income.
Earned income plus
Unearned income.
unearned income. Do we understand? Earned income plus what? Plus what? Unearned income. 1% of it will be your minimum tax. Now, let's still go back before we go to question. Let's still go back to some written. Under employment contracts, under the employment, now we said earned income, we have employment income under earned income. Under the employment income, we give example of employment income. What are the example of employment income that we
Salary.
give? Okay. Basic salary,
Benefit.
benefit in kind, housing allowance, transport allowance, bonus, etc.
Meal allowance.
Meal allowance. So many. But under the employment income, I want to talk about one of them, which is so key to our syllabus. The one of them I want to talk about is called what? This employment income that includes basic salary, housing allowance, according to personal income, we divide it into two. The employment income, we also divide it into how many? Two. One is called cash emolument. While second one is called what? Benefit in kind. Those basic salary, housing allowance, transport allowance, meal allowance, bonus, they are cash emolument. They are paid to you by cash. You understand my point? Do you understand?
Yes.
Why there is another one called benefit in kind. This benefit in kind is non-cash emolument. It's an income, but it's not paid to you by cash. What is benefit in kind? Those are the expenses incurred by who? Employer, in provision of benefit to who? To employee. The non-cash benefit received by employee from the employer is called what?
Benefit in kind.
Benefit in kind. Basic salary is cash benefit, is cash. Housing allowance is cash. Transport allowance is cash. Meal allowance is cash. But any non-cash expenses or benefit received by employee from the employer, non-monetary, is called benefit in kind. What are the examples of benefit in kind? Provision of accommodation. If your employer provides you accommodation, they do not give you cash. They give you staff quarter that you are staying. That staff quarter accommodation is a benefit in kind. Provision of official car. Your employer give you official car that you are using. It's a benefit in kind. Sometimes, maybe you are the CFO. You may be giving domestic staff like driver, like a messenger, gardener, housekeeper by your employer. security. Your employer can provide you that. They are all benefit in what? In kind. They are all benefit in what? In kind. If your employer give you generator, it's a benefit in kind. Now, what are the type of benefit in kind that we have? There are three type of benefit in kind. Number one, provision of other assets. Number two, provision of accommodation. While number three is provision of what? Domestic staff. There are three type of benefit in kind. Provision of other assets, provision of accommodation, and provision of what? Domestic staff. Let me start from provision of accommodation instead of provision of domestic staff. When your employer give you accommodation, your employer provide you accommodation as an employee that you are staying. What amount are we going to use as a benefit in kind that we are going to add as part of your income as an employee? If the accommodation is rented by the company, the annual rent paid by the company to the landlord will serve as a benefit in kind to you. It's going to be added to your income as an employee. However, if the accommodation is owned by the company, the annual rateable value means if the company want to rent the accommodation out to another party, how much will the company collect? The annual rateable value is going to be used as benefit in kind to the employee. Let me repeat myself again. On provision of accommodation, we look at it in two ways. If the accommodation is rented by the company, the annual rent paid by the company will serve as a benefit in kind to the employee. But if the accommodation is owned by the company, we are going to look for what is called annual rateable value. It is the annual rateable value we are going to recognize as the benefit in kind to the employee. Annual rateable value simply means assuming the company want to rent the building out, the accommodation out to another party that is not the employee, how much will the company collect? That is annual rateable value. Now, another type of benefit in kind we should talk about is provision of other assets. What are the other assets provided by employer to the employee? Example of other assets: official car, generator, plant and machinery, any other asset given by furniture and fitting. How much are we going to recognize as benefit in kind? The amount we are going to recognize as benefit in kind will be 5% of the cost of that asset. Assuming your employer buy a car that worth 20 million, they now give you as your official car. Every year, 5% of 20 million will be recognized as benefit in kind to you, added to your income. As you are still using the car, if you stop using the car, we are not going to use the 5% again. So any asset provided by employer to the employee as benefit in kind, 5% of the cost will be used as part of the income called benefit in kind. Another one. The third type of benefit in kind we need to look at, provision of domestic or support staff. Provision of what? Domestic or support staff. Your employer provides you domestic staff or support staff like driver, gardener, guide, cleaner, chef, and so on like that. If your employer give an employee those domestic staff, the annual salary of those domestic staff will be added as benefit in kind to the employee. Unless those domestic staff, they are permanent employee of the company. Take for instance, if the driver driving you is also an employee of the company, the salary of the driver cannot be added to your own income as benefit in kind. But if the driver is not permanent employee of the company, they just employ the driver because to be driving you. The driver is not a full-time staff to the company you are working for. That salary paid to the driver will be added to your own income as a benefit in kind. You that enjoy the service of the driver. So that is on provision of domestic staff. However, there are some expenses incurred by employer on behalf of employee, but we cannot regard those expenses as benefit in kind. What are those expenses incurred by employer on behalf of employee or for employees that we can't regard them as benefit in kind? Number one, expenses connected to provision of meals or canteen service or provision of lunch voucher. If your employer is giving you food every day while you are working, they are providing you food to eat. That food you are eating is free of charge. We cannot add that to your income as benefit in kind. No. So provision of meal or lunch voucher is not a benefit in kind. Another one, provision of uniform, protective jacket, protective clothes, or overall against accidents. If your employer give you uniform or any other items, maybe like they give you a boot and so on like that, all those ones cannot be regarded as a benefit in kind. No. Another one, expenses connected to change of residence. They transfer you to Ibadan. You want to pack your load from Lagos to the Ibadan branch. Your employer now give you, they now pay for the logistic. That expenses cannot be regarded as your benefit in kind. It will not be added to your income. Another one, touring expenses. You went to go for events, or they sent you to a workshop. They now give you some pocket expenses. You may need to spend this. So that one too cannot be regarded as what? Benefit in kind. Like I said, employment income, we divide the employment income into how many? Two. cash employment income and what? Cash emolument and benefit in kind. And I said these benefits in kind, they are what? Non-financial benefits provided by employer to the employee, non-cash benefit provided by employer to the employee in the course of what? Employment. One of them is provision of accommodation, another one provision of other assets, another one provision of domestic or support staff. And I've explained them one by one. The next thing we should look at, this your employment you are talking about, employment. According to the labor law, there are two types of employment. According to the labor law, there are two types of employment. There is one called contract of employment, while the second one is called contract for employment. Contract of employment. Second is what? Contract for employment. What is contract of employment? Contract of employment means an agreement between employer and employee who state out the employment responsibility, the duties. In contract of employment simply means full-time employment, where you receive salary, you receive allowance, you receive transport allowance, basic allowance, housing allowance, and so on like that. It's a full-time job. That is what contract of employment is talking about. But in the case of contract for employment is a part-time job. You are engaged to provide service, to render service. All those professionals, auditor, lawyer, they render contract for employment. They did not render contract of employment. External auditor that renders audit service to country. It's not a full-time staff now. His own job is contract of employment. You render service. So, what are the difference, the major difference between contract of employment and contract for employment? In some textbook, they will call contract of employment as full-time job, while contract of employment is what? Part-time job. Some people will call it contract of service and contract for service. Some people will call it what? Contract of service and what? Contract for service. Part-time income and full-time income. It's the same thing. Now, what are the differences between contract of employment and what? Contract for employment. Number one, an individual under contract of employment earn what? Earn salary. Why an individual under contract of employment earn what? Profit. Second difference, an individual under contract of employment is assessed to tax on actual year basis. Why an individual under contract for employment, they are assessed to tax on what? Preceding year basis. Contract of employment is a full-time job, while contract for employment is a part-time job. Another difference, an employee has a right to be unlawful, not to be unlawful dismissal. Why, in the case of a contract for employment, once you finish rendering the service, the contract terminates. But in the case of contract of employment, you cannot terminate the employment contract anyhow. The full-time job contract, you have to follow some procedure. You have to follow the labor law. An employee, full-time employee, you cannot terminate his employment anyhow, unlawful. You have to follow the labor law. You have to pay him some compensation. But in the case of contract for employment, it's a part-time job. Once the person finishes rendering the service, you can terminate the appointment. Please, we want to look at question. Okay, we want to look at question 1. Can you help us read the question 1?
Okay, sir.
Mr. Willie was employed by Zenon Bank Limited as head of banking operations, effective from June 1st, 2021. The details of his salary are as follows. Basic salary per annum, 48 million. Housing allowance, 12 million. Can you scroll up, sir? Transport allowance, 2 million. Utility allowance, 800,000. Meal allowance, 500,000. Leave allowance, 4,800,000. Clothing allowance, 2 million. Mr. Willie was provided
Mama, baby nurse, Angela make keeper.
Please try to mute your audio.
One guy like that. Are they serious? So I'm serious.
Mute your audio.
Yes.
Who is that?
Alabi Kayode.
Mr. Alabi Kayode, mute your audio. So let me read the question by myself. Mr. Willie was provided official car. The cost of the car is 7.5 million naira. He was also provided driver and personal assistant who were paid 300,000 naira and what? 500,000 naira per annum. Proud to joining Zenon Bank Limited, Mr. Willie was on annual salary of 32 million naira while working with Carbon Bank PLC. He resigned from the bank effective from when? May 31st, 2021. Mr. Willie is married with 6 children. All are of school age. He maintained an 8 parent who live with him in Lagos. He paid an annual life insurance premium of 3 million naira. His employer deducted and remit on his behalf the following mandatory deduction: 4.9 million naira and 1 million 166.67 for NHF and pension contribution, respectively. He paid NHIS premium 350 in 2021 to health service provider to provide medical cover for himself and family. You are required compute the tax liability of Mr. Willie for the relevant year of assessment. Are you with me?
Yes, sir.
Yes.
Hello?
Yes, sir.
We are together, sir.
Now, which year is going to be the year of assessment? The information given to us, they said Mr. Willie was an head of banking, effective from when? June 1st, 2021, Abi, in a Zenio bank.
Yes.
All this income given to us is which type of income?
Personal income.
Personal income.
We know it's personal income, but
And
what type of income is this?
and
And
income.
Earned income. Under the earned income, we divide it into two. We said employment income and what?
And then
everything.
This is an employment income under earned income. And employment income is assessed to tax on what basis?
Actual year.
Actual year basis. So this income given to us is for which year? Is for
2021.
That means our year of assessment too will be 2021. Our year of assessment will be what? 2021. Now, look at Mr. Willie. Before working in this Zenith Bank starting from June 2021, from January to May, where is he working? Because actual year basis means something that runs from January to December. That is meaning of actual year basis, Abi?
Yes.
So what about his income from January to May? Because this one started from June. We are provided. Look at here. They said before he worked in Zeno Bank, he has been working in where?
Carbon Bank.
How much is his salary there?
32 million annual
32
salary.
million. Now, if you want to compute Mr. Willie, we are going to say earned income. All this income given to us by in this question is an earned income. There is no unearned income. There is no rent received. There is no interest received. There is no dividends received. But this earned income, I'm going to, under the earned income, we have employment income. We have income coming from trade. In this question, the only income given to us regarding to Mr. Willie is an employment income. Is what? Employment income. They did not give us where Mr. Willie is collecting income from, where he's doing business. Every income given to us is an employment income. Why this employment income? I'm going to divide it into two. Old employment and what?
New employment.
New employment. Now, let me start from the old employment. For the old employment, Mr. Willie earned how much from the old employment?
32 million.
32 million. This 32 million, if you want to compute tax of Mr. Willie for 2021, how many months are we going to use? You know, it's an annual salary. It's for 1 year.
That'll be 6.
Mr. Willie resigned from
5
the
months.
5
bank.
months.
It's 5 months.
It's going to be 5 months. January to when?
May.
May. So 5/12 times 32 million. How much is going to give us?
30.333 million.
That is how we get this. Under the old employment, the annual salary under the old employment is 13,33333. Do we understand how we get that?
Yes, sir.
Yes, sir.
Now, let's go back to the new employment. For the new employment now, he started working in the new employment from where?
June 1st.
June 1st to December. How many
Yes.
months is that?
7 months.
7 months. Now, under the new employment, this basic salary of 48 million is for how many years? How many months?
12 months.
Is for what?
12 months.
12 months. How many months do we need in our computation?
7 months.
So 7
7
over
months.
12 times 48 million naira. That will give us how much? Use your calculator. That will give us how much?
28 million. 28 million.
We go back to the next one, which is housing allowance too. 7/12 times what? 12 million. 7/12 times what?
7 million.
12 million.
12
That
million.
one will give
7
us
million.
7 million. Transport allowance. 7/12 times what? Times 2 million. 7/12 times what? Times
1
2
million.
million.
1 million 1666667.
The next one is what? Utility allowance. 7/12 times 800.
466,000. Okay.
Meal allowance. 7/12 times 500. Meal allowance. 7/12 times 500. What is it giving us? Please help us use calculator.
It's correct, sir.
Okay. 291,667.
Yes, sir.
For the leave allowance, 7/12 times 4.8.
2.8 million.
For the clothes allowance, 7/12 times 2 million.
1.16667.
All correct. These are the income. Apart from this income, look at it. They said Mr. Willie was provided with what?
Official car.
Official car.
And the cost of official car is how much?
7.5 million.
7.5 million.
This official car is what type of income do we call it?
Benefit in kind.
Benefit in kind.
Benefit in kind. So how much are we going to recognize for this official car?
5% of the cost.
Yes, fine.
5% of the
Cost of
cost.
the car.
5% of 7, mind you, 5% of the cost is for the whole 12 months. But this new company that provides him a official car, in this year, how many months Mr. Willie worked there?
7 months.
7 months.
7 months. So we will now say 5% times 7.5 million times 7 over what?
Yes.
12. So somebody should help us.
218,750.
218.
218,750.
You can see how we get the 218,750. Can we see that?
Yes, sir.
Yes, sir.
5% of 7.5 million times 7 over 12. You prorate because he did not enjoy the official car for 1 year. Apart from official car, they now said he was provided with a driver and personal assistant who were paid what? $300 and $500 per annum. The driver and personal assistant is also what? They are also called what?
Benefit in kind.
Fine.
Benefit in kind, domestic support, domestic staff.
Benefit or support staff.
Yes, support staff. We are going to put it under his income too. We call them BIK, benefit in kind, personal assistant. You know, the salary given to us for the driver is for 1 year. It's for 1 year per annum. So how many months are we going to recognize?
7 over 12.
7 over 12. For the personal assistant too, 7 over 12. Because Mr. Willie did not work in the company for 1 year. He worked in 7 months. So when you do that, you will get this for the driver, 175 for the driver. For the personal assistant, you get this, 291,667. Hope my explanation is clear.
Yes, sir.
Yes, sir.
At the end of the day, we don't have on earned income. We know in my format, I said when you add earned income plus on earned income, what do you get?
Total income.
Total income. That means our total income is going to be the sum of only all the sum of the earned income, all the sum of the earned income, everything. We are going to sum everything since there is no unearned income. There is no unearned income in this question. Example of unearned income: rent received, interest received, dividend, royalty. We don't have it in this question. You can see under the unearned income, I leave it blank. At the end of when you add all the earned income, the total income is going to give you 54,910,417. 54,910,417. After that, you will now less tax exempt. According to the format, you will less what?
Tax exempted.
Tax exempt. In this question, do we have tax exempt? Who can give me 4 examples of tax exempt? Example of tax exempt.
Pension.
Example of tax?
Yes. Payments to NHIS.
Yes.
Life insurance.
Life insurance.
Gratuity.
Okay.
The gratuity if it was added in the end income.
NHF too.
Yes, sir.
So in this question now, Mr. Willie paid annual life assurance premium of how much? 3 million.
3 million.
That is one of the tax exempt. You don't need to prorate that. You don't prorate tax exempt.
Okay.
3 million. Another tax exempt we have For NHF, how much is this NHF?
4.9 million.
Million. We put that. Pension call,
1,166,667.
we put that too. We also have another tax exempt called what?
NHI.
NHIS. So we write all the tax exempts. We write them. What are the tax exempts? Life assurance, 3 million. NHF, 4.9 million. Pension, 1,166,667. NHIS, 350. At the end of the day, when you add all the tax exempt together, you will get 9,416,667. You will now less it from your total income. If you less it from your total
Excuse
income,
me, sir.
yes,
Why is it not pension prorated? Because pension is charged every 6 months, sir. Why is it not prorated, sir?
the pension, this question means the pension given to us in this question is for the pension. This pension is for the both company in work, both the new company and the old company. The pension is for the 1 year. In one company, you work for 5 months. In another company, you work for how many months?
7 months.
7 months.
So in this question, the pension given to us is for 1 year. All the tax exempt given to us is for 1 year. They did not tell us that it is this company that paid the pension. No. Assuming they tell us that this is the pension paid by Zenith Bank, this is the pension paid by Carbon Bank, we can prorate. Do you understand?
Yes, sir.
So your gross income is 45,493,750. 45,493,750. Now, after gross income, you less tax relief, which is called consolidated relief allowance. How do you get your consolidated relief allowance? Higher of 200,000 or 1% of gross income plus 20% of gross income. Look at it now. 200,000. How much is 1% of gross income?
459,937.
454,937. Is it higher than 200,000?
Yes.
That is the reason why we pick 454,937. Assuming this amount, 454,937, is less than 200,000, what are we going to put here? Where I highlighted. What am I going to put there?
200,000.
200,000. Second consolidated relief allowance is what? 20% of gross income. 20% of 45,493,750. It will give us 9,098,750. When you add the two together, it will give you 9,553,687. You will now minus that from where?
From gross income.
From the gross income. If you minus that from gross income, your chargeable income will give you 35,940,062. 35,940,062. That is your what? Chargeable income.
Profit.
Chargeable income. Now, this is your chargeable income. This is your chargeable income. You can now compute your tax. What is your personal income tax rate? First 300,000 at 7%. That one will give you what?
21,000.
21,000. Second 300,000 at 11%. That one will give you what?
33.
33,000. Next 500,000 at 15%. That one will give you what? 75,000. Why the next one is next 500,000 at 19%. That one will give you what? 95,000. Next 1.6 at 21%. That one will give you what? 336,000. Now, above 3.2. What is above 3.2? What we are saying is this 300,000 plus another 300,000 plus 500,000 plus another 500,000 plus 1.6. How much is it giving us?
3.2 million.
3.2 million. You minus it from where?
The total income. The
From
chargeable
the
income.
chargeable income.
Yes.
If you minus it from the chargeable income, what is the balance? What is the balance?
32,740.
32,740,062. Abi?
Yes.
That one will be taxed at what percentage?
24%.
24%. So you add all the tax together. That means the total tax liability that this man will pay is 8,417,615. Do you have any contrary opinion? Do you have any observation? Do you have any question concerning this? At the end of the day, if we add these 300,000, 300,000, 500,000, 500,000, 1.6, and 32.740, what is it going to give us if we add everything together?
Chargeable income.
It will give us the chargeable income, which is 35,940,062. Do we have any question?
Yes, I have a question. For benefit in kind,
Yes.
when you are being given an official car, let's assume you hold a marketing position, then you are being given an official car to run companies errand, like to promote the brand, to places and everything. Can you still be charged 5% for benefit in kind when that car and the benefit goes directly to the company?
Who is using the car?
The employee.
He's the employee. So you will be charged benefit in kind. Except if the car is for official use, it's not given to you direct that this car is given to the managing director or is given to the CFO. Maybe they are using the car for adverts. That one is different.
Okay.
Yeah.
Sir, for the car as well,
But
hello, sir.
I can hear you.
Yeah, in a situation where you are giving the car, also, it's actually an asset, but the car is depreciating every year, and you are still charging the same 5% on the car
Who
every year,
owns the
like
car? Are you the owner of the car or the company?
the
In the
company
book of
bought the car from the
in the
employee.
book of the company will be charging depreciation now. It will be part of their fixed assets. What we are saying is they give you a car that belongs to company, you are using it. It's a benefit in kind to you employee. So every year, 5% of the cost will be added to your income.
hello, sir.
Yes, I can hear you.
Like same to that car issue too, sir. What of in the case that someone has been using the car before, but they now give another person the car? Like that 5% now, are they going to be charging it on the new person, or it's going
Yes,
to end like that?
it's going to be charging on the new person.
Okay.
So far as the person is still using the car.
Okay, sir.
Yeah.
Yes, sir, please, I want to confirm something. So I believe this car is like the car that like the company gave to the employee, not the one that
Yes.
the employee acquired through like maybe the car loan or status card that the employee
No,
has to
no,
pay
not
back.
that one. No. Not that one. No. The car that belonged to the company now gave it to employee. Not the one that employee borrow you a loan to buy a car. That one is different. Oh. That one is not benefiting. You are using your money to buy that one. Nobody will come to say you come and pay tax on that one. Do you understand?
Yes, sir. Thank you, sir.
Yeah.
Sorry, sir, still on the car. You as an employee, maybe when you are leaving the company, so you left with the car. So your new company, what will happen? Will you still
I don't
continue
have any
paying?
problem.
You
No.
left the car when you are. What do you say? Why everybody is asking question on car?
Like
Ah,
when
They
you
want
are
to
We
collect
don't
leaving
want
personal
to
car,
pay.
that's right.
We don't want to pay. That's the truth.
the when you are leaving the company, they allow you go with the car.
if they allow you go with the car, you are leaving the car. That means the company are giving you the car. No problem. You will not pay tax.
Okay, even in your new
But
company,
if the
there's
car
nothing
still
like
belongs to the company, you are enjoying the car, you will pay tax. Do you understand?
Yes.
So, in the absence of no question, by next week, we continue again on personal income tax. We are still going to solve at least 4 more questions on personal income tax. 4 more questions
That's
on
good.
personal income tax. 4 to 5 questions. We are starting from the simple one. So, thank you for having me. Have a nice day.